A very good morning to one and all present here, and very happy new year to everyone. And I hope 2021 will bring a lot of happiness and good wishes to everyone present today. So we'll start the today's webinar on a very good note. We'll be on a pitch of more happiness and in the more on the terms of learning and on a prospect career ahead. So today's webinar, we will be looking upon the four tools. The tools are Architect, FNO News, then we are looking into triggers and seasonality. So before starting the demo, I would like to introduce little about the Quantsapp tools. So when we started back in 3 years, we started with the 9 tools. Now at present, in a span of 3 years, we have around 48 tools altogether, in which 30 tools are into free, 17 tools are into the premium tools, and one tool is premium algorithm, that is our Quantsapp optimizer. So we have a complete package of tools. So today we'll start with the Architect, and we'll see how. So if you say ki I want to make a strategy, okay boss, but what strategy you want to make, how to see the payoffs, how to see the different option greeks, how to look into the, I would say, the scenario analysis doing. So this is the place. Option trigger is a play. This is a tool where you can actually do a lot of things. You can make any of your custom strategy. So one of the biggest problem that comes that when you are making a strategy that, okay boss, I know I have to make this particular strategy. Let's say I have to buy a call option or I have to sell a call option. I have to like what will happen, how the payoff will happen if I change my strikes for the calls and put. What will happen if I'm selecting a buy for a leg and selecting a sell for a long. And there's lots of confusion that goes on and goes on. But this is the first step of confusion. And if I say that, okay boss, let's say I figured out my strategy, now I'm making it. What after that? After that, you should be, I should be, or like anyone who is doing the tool, who is using the that making that strategy, looking into that. After making into it, what is going to be my payoff? And that is something which makes a lot of strategies to turn around themselves. So if I want to say, okay boss, if I'm making any strategy, so what is the required thing which is going to make me in the that in the good payoff? Is a volatility, is that a good movement, or the strategy should be in the range? Because sometimes when you like by mistakenly we make a strategy that requires like the underlying stock to be in a range, or required stock to underlying to move heavily on the one side or in the either ways. So there's lots of factors that you should be keeping when making a strategy. So if I say, okay boss, so let's say I have to make a strategy, I have to look into the payoff, I have to look into various things, then all this, it's one side aside, keeping all this thing one side. Now, if I say, okay, boss, strategy, I made the strategy, I saw the payoff. I made, anyhow, I calculated my break even for my strategy. But is it proof enough that it will go with it? Or rather than calculate the system to calculate for you, let the system to draw the payoff for you. And then we'll look into. So the final thing that is we're going to look for this architect is looking at the payoff, or sorry, scenario analysis, and which is one of the required thing in this situations, like as the situation we have seen for the last 1 year in the 2020. A lot of thing has changed. The volatility has gone far away. Then it's reverting back to place. So there are lots of things we're gonna see how you can actually customize your make your any of your custom strategy, can look the payoff and do the scenario analysis. So let's begin. So if I say, if so, we're gonna take the Nifty for it. So we are taking Nifty. So okay, boss. Now if you see, it has written fair price over here. So the concept of fair price is that is it has been calculated on the basis of your at the money strike for your underlying stock, then adding the call option premium and my like mims the put option premium. So in this way, the fair price has been calculated. So so if I say that for the weekly expiry, we don't have futures, and futures are the required thing in the FNO market. So if you are doing option trades, we are like I usually see the future price. Most of the people look into the future price. So for the weekly expiry, like we have the weekly expiry here. So for the weekly expiry, it's calculating the fair price. And if you're gonna take the like say monthly expiry of 28 Jan, now you can see it's here the future price which has been written. So if you get confused, ki, okay, boss, what is fair price? Why this fair price is coming? So don't worry, it's just a concept which is calculating. So you don't have to worry about that. So we'll take the first. We'll see for the month weekly expiry. So if I say, okay, boss, Nifty, I have Nifty as my underlying stock. I can see the fair price or the future price for it. Now depends what are the legs you are using. Either you are using the option or the futures. So if I say right now we are just gonna make the future strategy, you can also make taking the future as well. So we are taking the options. Now herein, as we have seen, so while making an strategy, choosing your choosing your expiry date, it's one of the thing you should always consider and keep in your mind. And that why I'll tell you what happened. Sometimes what you think that my movement will come at this particular time or the in the couple of trading session or in the like more than that, but there's a possibility that that movement did not came, or when you're looking that the movement you're looking for only a range bound strategy, but suddenly there's a big movement and you are still going you don't have time, like expiry is coming up. So choosing your expiry while making a strategy is one of the required thing, and I would say always see that how the uh, like always experiment with it, like looking into it that how the different like the next to next expiry is going to treat the particular option strategy. So if I take, so let's take 21st Jan. So we have the good amount of time looking at the doing the scenario analysis. Then then I have the call like this is, so here you can see the at the money by default it will give you the at the money strike. So after taking the at the money, you can see the price. Now you can see the call option or the put option you want to take for your custom strategy. So if you are making any strategy, you can do so. Then that's a call option, put option. So if I take call option, then you have the price and quantity. Now you always keep on looking at the whether you are looking for a call or whether you want to buy or sell, because buying and selling an option is altogether thing. So you should be looking into whether you're like what are the strategy you wanted to make. So whether you buy strategy or sell strategy. So as of now we are only having a one leg to the option strategy. uh, Sorry, that's so So if I'm saying ki we are as of now you are having only one leg strategy. So I'm looking only the strategy. Like if I suppose if I'm making a long call, then how can be the scenario? Okay, boss, you made a one leg strategy. Now after you want to change your strategy to the bull call spread, or maybe you have a long call, also wanted to add one more leg that's on the put side, long put. Then you're making the straddle. This, or maybe you can wanted to make any other strategy. So you have different options. So first we are looking at the how you can add one leg. Now after adding a one leg, After adding one leg, now I'm looking at how the payoff is, how my strategy like option Greeks of these strategies. And as we all know, while doing the options, while looking at the option Greeks is one of the very important factors. Like the whole, like I would say, the lots of thing depends on the option Greeks. The pricing of an option depends on the Greeks, how the Greeks are changing, how the how different option Greeks are going to affect the option premium. So this is something you're gonna look. And if I say ki, okay boss, if my delta is 37, that is okay. So that's a point movement, like a movement will be around giving me, so giving me, okay boss, how this is the amount of option premium is going to change. So if I say my theta is this amount, so that is I'm gonna lose this some particular amount of money from my option premium over the period of time, like in a one day. So this is something you should be looking into, the how option Greeks are going to behave, how they are going to change the payoff. So if I say, okay, boss, now we have this strategy, sorry, one leg strategy. Now I'm going to go and add one more leg and see now how you can make uh, a one leg strategy to a different like two, three leg strategy or four leg strategy. And you can also experiment looking at the different strikes, looking at the how if you combine two strikes, how you if you combine a call option, a put option together, if you are combining a buying and a selling leg, then how different like how this particular that particular strategy is going to be, how could be your payoff scenario analysis. So let's say we're gonna make let's take a straddle, long straddle. So we already have a long call. We're gonna add one more leg. So symbol is going to be a fixed option expiry. Now if I'm going to 28 Jan, okay, this is my at the money. This giving me by default at the money. Now here I'm gonna call switch to the put. I'm switching the put buying option, and my then automatically I'm getting the price for it. Now if I see, like if you want to make any if you want to combine a future leg, you can also do so. So you have the option like whether to make from the options or the future at any point. So I'm gonna add it. So this is my long straddle. So if I'm making the long straddle and looking into okay boss, how now the payoff, what can the payoff, what is going to be my break even point, how could my strategy is going to react over the period of time. So you can say we have taken the long expiry, so we have a long period of time to do my analysis, sorry, to do my analysis. So if I say key boss, okay, now we made the strategy, but making in a particular strategy, now we're gonna see that how much amount of movement it does require to make you like in a profitable situation over the period of time. So if I say okay boss, on the payoff side that I made my strategy, I saw my option Greeks, this is my option Greek. So I can see the option Greek for one leg, option Greek of the second leg. Now I can also see the option Greek for both the leg. And this is something which is you should be looking, boss strategy bana liya, boss Greeks dekh liye, boss sab kar liya. Combined strategy Greek, this is what you should be looking into, because if the underlying is going to move, it's going to move for both the strike. And then calculating that part and looking at that, okay boss, if my 1 point in the underlying is going to, how my option is going to get affected. So this is a combined Greek which is going to let you know, okay boss, is the theta value is then this is a very huge value that you're going to lose over a period of long time. So you should be consider while making this all these things while making in strategy, and this is very handy looking into it, just tricking your strike and letting the option architect to work on it. So if I go move to the move to the payoff chart. So now this is the place, this is the point where you should focus more and more, and this is the point you should be looking more. So if I say that the white dotted line, if you see here, this is a payoff as on the date where you are standing. So the what I'm trying to mean that if I say that if I'm making this strategy today, so how can how the my payoff is going to look like based on today only. So if I say my Nifty is trading at around 1440, the fair price something. So this is the orange, so the yellow dotted line, it indicate the fair price. So if I say my Nifty, the underlying stock is trading at around somewhere at 14,040. So one more thing, so the prices you will see here, that's more on the so all the prices here are the future prices, and so there's no cash prices. So if you find any difference from in the concept prices, so don't worry, that's all are the future prices, because there is a possibility that you will find these prices different from the spot price. So nothing to worry about. The all prices are the future prices. So now if I say this is my orange line, which is telling me, keep boss, this is going to be my payoff. So now I have made a strategy which is on a very, or like say, which requires a lot of movement. And how I'm doing so, I'm looking at that thing that this required a lot of movement. So if you say that today 1440, if requires around if I go look into that, around 13,600 is a point where I will be in slightly in the profit. 13,600 on the downside if Nifty goes, and 14,400, this is a point. Around 13,300, let's take. So this is saying ki, okay boss, you required a lot of movement in your underlying stock to support you, to make you in the good payoff situation. So if I say, okay, understood your point. So if I say, if I'm looking into it, so if the Nifty is going more and more and more, so I can see this is going to be my payoff. And if the Nifty is going down, this is going to be my payoff on that particular day. Now I'm looking into, okay, I took my strategy for a day. What if I'm taking this particular strategy till expiry? I'm looking into that I want to hold this strategy, or I'm still waiting for that strategy bana liya, but still there's no movement, or there's no desirable movement. I would say there's no desirable movement that is going to make you in the good profit. So if I say ki, okay boss, abhi ye strategy ban gaya, if I am taking holding the strategy till expiry, then how can calculate how can I can calculate my payoff for the long period of time? How I can see that where is a point that is going to be my break-even point? What is a place where I can actually go and get some profit from that particular strategy? So the orange line, that indicates the your expiry level payoff, and this is the level if you are holding till expiry, so you should be considered that. So now if you see that this particular strategy for the level of expiry required a lot of distance to get in money, to get profit for you. So now you can see this is a point which is going to be a lot, it's very far from the current price, because so if you see put option which we are buying for the at the mini for the 21st January, it's around 1431. It's huge money, huge premium. And if you see for the call, it's okay. So the movement which is required, a lot of movement it does require to make you actually in the money. So basically what we do, we don't see how to look into the break even point. If you are making a complex strategy, the break even is going to be a more complex side looking into it. So if I say ki, okay boss, let the option architect do it and let it calculate for the expiry as well. So I can see this is going to be a very long time, a long period, amount of, it's required a long, I would say, movement to make you in the money. So this is how, this is a place where you can see. Now, if you switch on the this graph, you can see that or at what particular level how the your payoff is. So if I am looking at the level of 12,270, then at this point how my payoff is going to be. So at this point it says your profit and loss for the particular day is going to be around 53,000, and for the expiry it's going to be at around somewhere for the 8,000. So this is the place where you can actually see at what level your payoff is going to be, what the payoff is going to be. So this is the level you're gonna see that at what level the payoff is going to be. So this is about the I would say we have completed 65% of the option architect, where we have seen that you can create any of your custom strategy. After looking into it, we have seen that what are the how you can add the legs, how you can see the Greeks, and then we have seen the option payoff, how to read it. So this is the payoff for the particular day, and this is the payoff for your expiry. So this is how you can see the payoff, how you can read this chart. Now if you see here, this is your payoff, that's on positive, negative. So depending upon your strategy, like while doing any custom strategy, there's lots of different things which are gonna come. You can see the payoff graph in a very weird way. So looking into it, reading into it is going to be very simple. Don't worry about it. Now if I want to do the scenario analysis, and in the last the 1 year we have seen a lots of uh, movement that has came, the lots of uh, uncertainty that has came. Underlying stocks has moved all the way from 5% down to 5% up. So there's lots of things that has happened. So, and there was also a time when the stocks were not moving up, and looking at the desired amount of movement did not come. So if I say that if I want to analyze that particular situations, when I that as a person who is holding this strategy have to hold that particular strategy for more, even 5 6 7 days, for waiting for your expiry. So that particular time, like we all know, if you are holding this strategy, if you are holding any option, is going to bleed over a period of time in the terms of theta. So theta is going to make you, the option premium is going to make it bleed. So you should be consider if you want to really want to hold that strategy for a long period of time or not. And then doing the looking at the employed volatility. So employed volatility is also one of the important factor in the option. So in volatility has a direct relationship with the option. So if I say that volatility is increasing or spiking up, so option premium are also going to change. So volatility change. So if you can see the Vega here, so volatility says the amount of change that will happen in the option premium with respect to 1% change in the volatility. So Vega, you should be looking at theta, Vega, delta. So Vega, so volatility is also one of the very important. So we're gonna see how you can do that all this thing in one go. So say suppose if I made this strategy, and due to some factors, let's say today is Saturday, Sunday, then it's going to be Monday, Tuesday. So if I say ki for the two couple of days, for the next 2 days, I'm not looking like there's nothing is going to be happen. The theta is going to making the option to bleed over the period of 2 days. So 2 दिन का option premium तो अभी जाना है. I'm looking ki okay boss, okay, ki even though after a period of time, say 4 5 days, the amount of the moment you are looking for did not came. So if I say that if I'm holding that particular strategy for more 6 days, so now what is going to be my payoff? Now this white dotted line. So if you have seen here, what I did, I increased the 6 days that I'm holding this strategy for more 6 days, and we have 19 days to the expiry. So we have 19 days to expiry. I'm holding more 6 days. Okay. Now if I say that my payoff has changed like in a huge way, you can, if you have noticed here that your payoff has changed in a huge way, you can see the dip here. The dip was slightly on this way. Now the dip is very big, as if you are going to hold this strategy for 6 days. Now you required a lot of movement in your underlying stock to look into that how the payoff is going to be. Now this white dotted line represent the payoff as on the sixth day. So आज स्ट्रेटेजी बनाया, 19 दिन एक्सपायरी के लिए है और 6 दिन गुजर गए, 6 दिन तक मैंने स्ट्रेटेजी होल्ड करा. स्ट्रेटेजी होल्ड करने के बाद आई कैन सी दिस इज माई डिप, दिस इज द प्लेस, दिस इज द रिक्वायर्ड मूवमेंट that I required on the 6th day. So if I zoom in here, so if I say that's roughly around somewhere to 13,000 to 13,100 level it required on the 6th day to have a big movement, so I can earn a little bit on the 6th day. And the same way on the upside, that required a lot of big movement that should come in your underlying to make it more in a more profitable way. And expiry is going to be remain same. You that's like this is the final day, so this is showing you the payoff for the final day. Now say, unfortunately, the even though after holding the strategy for 6 days, and this can be for any custom strategy. So if I say even holding for the 6th day, the movement did not came, and I have to hold till or more 5 days. Now you can see the payoff you are going to be that's getting more negative side. Now underlying stock required like a huge movement either of the side to make it worth, to make it hold it, to make it in the amount of profit. So white dotted line is indicating the payoff. Now this white dotted line indicating the payoff as on 11th day. 19 दिन में से 11 दिन मैंने strategy hold करा, and now this is the big dip that is coming. So if you see, the profit and loss is negatives going on the negative side, negative side, negative side. So this is a point you should be looking into, that if you so sometimes what we do, we look hold any option for a couple of more days, looking into that we have a lot of time for the expiry. But in sometimes what happened, that holding that strategy go like holding any option goes wrong, because sometimes expiry is very nearby, or and that's make it more worse. So you should be looking, you should analyzing that if I'm holding my strategy for a long period of time, then how much movement does it require to make me in the profit, how much amount of movement should be there, and to make this strategy get in the profit. So this is a point you should be doing into it, and this is we saw how we can see and use the option scenario analysis. Now if I'm gonna see, and so if I see now I'm gonna see that okay, we saw the if I'm holding the options, then how I can see my payoff for the different days, how I can see my payoff on the different this is my strike, so different level, how will be my payoff. Now if I say that I want to see about the volatility, and volatility is a direct having the direct relationship with the option premium. So if volatility is going to get more, going to increase, the option premium is also going to increase, and volatility is going to down, the option premium also going to down. So I still remember at the time of March, mid of the March to I think on the third or fourth week, somewhere to the a level of second of half of the March, that 15 to 30 of March. If you have noticed, there's a lot of spike in the volatility. India VIX has reached to the level of almost 80. At that point, many of the stocks volatility has increased in a very like I say in a very big fold, and that particular time. So if you have noticed, if you have seen that time, option premium has uh, actually were trading in the fold of 6-7 times, and at that time the expensive options are very expensive. Why? Because the volatility has spiking up. I know that that underlying has also changed in a very huge way, 6 7%, 8%, 10%, many of the stocks altogether movement in the underlying stock. But if you have noticed, even though underlying is going down, call option premium was also that were not getting very cheap, because volatility has getting more and more impact on the options. So if I say the volatility is increasing, then your option premium, even for the call and for the put, both are going to increase. And volatility is going down, its volatility is reverting back, because volatility is a mean reverting. If it's going to revert back, then option premium of your both call and put is also going to decline. So if I say that in the meantime, if you're holding this strategy for 11 days, so let's take it a bit on the, like say 5 days or 6 days. So if I say for the 6 day, on the sixth day, suppose now I'm holding this strategy 6 day, I'm looking at the payoff. Now at this point, if I say that volatility spiked 25%, now you can see the marginal increase that came in the your payoff. The payoff which was on the negative side because of the increase in the volatility. So both for the call we have taken and the put we have taken. So as the volatility has spiked up, the call and the put premium has also spiked up in a big way. Altogether, from the negative side, you can see, you can now analyze if volatility is spiking, it's going to spike up. The if volatility like uncertainty or something is going to come up, you can see the actually the premium has increased in a big way. So this is a point of analyzing it. Now if I say if volatility is spike up by, let's say, by 16%, now you can see there's a like marginal negative downside as well here. So if the underlying stock remains still the range of this, if I say 13,465 to the level of 13,500, so this is the level which you're going to be in the loss. But if in the same way, if I say the volatility has spiked up to 25, now you can see even nifty stays like the underlying stays at that point only, you're still going to be in the profit, you're still going to see the payoff of your strategy is in the positive side. So this is the point where you can analyze and see, okay, I'm making my strategy custom strategy, any strategy, taking any of my leg from the call side, put side, whether I'm buying it, selling it. I can see I'm looking into it. This is my option Greeks for that particular strategy. Oh, sorry, for the each leg, and this is the combined Greek of my strategy. And on the downside, oh sorry, on the right hand side, I can see the option payoff chart. I can see the expiry payoff chart and the payoff as on that particular day on which I'm moving on. And we also saw that how we can read this particular graph. Then most importantly, doing the scenario analysis, we saw that how you can actually look into any scenarios, like because we hold our strategy for a couple of days more, impact on that is going to be a big. If it's nearby to expiry, impact of it's going to be very less if it's like far to the expiry. But we should be knowing, if I'm holding a strategy, how my payoff is going to be on the different days to the expiries. And believe me, this is something I do, this is something which I do prefer looking at the when doing the looking at the options. And this is employed volatility. We saw how volatility is actually going to affect. So we saw the upside volatility. So if I say that volatility has declined, if I say volatility declined by 14%, so first take it to the zero once again. So if I say my volatility is near to 0, so this is my payoff on the sixth day. If I say ki okay, on the sixth day volatility fall by 11%. Now you can see there was slightly marginal dip on this side. So if when I say that volatility decreased by 22%. Now you can see the dip is getting more and more. Why? Because volatility is falling down, and volatility is going down, which means that your option premium are also losing money from it. So you should be looking into it, that how that volatility can actually affect your options, and holding any strategy for a period of time uh, you can actually see the payoff for it. So this is about the option architect, and I hope we all have cleared on this part. And please, if you have any doubt, please ask us. Now, if I move to the FNO news, so we have seen the architect, that where you can make your custom strategies. Now, if I move to the next step, and if I say I want to see different strikes, so if I say what really happening in the market, if I say that what is actually going on in the market in the whole FNO segment. So if I say, for the whole day, I want to see in which stock there's lots of movement happen. So what really happened in we can't really track all of the stocks. We can't really track the strikes, particularly strikes of all the FNO segment. So if I'm in the FNO news, so how I can actually see the movement that is happening in the different stocks, and particularly strikes on that stock. If I say that, so this is the yesterday's data. So this is for the 1st of January. So if I say that, if I'm looking at the Voltas, so in the Voltas, I can see on the 20th January, for the 20th January expiry, 800 call option. So there's on the call option, there's a long build-up is going on. I can see the OI, the increase in the open interest by around it's nearly 600%, 575%, and the price change is not much, but you can see the spike in the OI that come on this particular strike. If 800 call option, you can see the OI has increased by this. So I can say that, okay, there's a build up which is like open position, like market participants are actually who increasing their positions, like holding their open positions in the Voltas 800 call option. So if I say, so this is something which is giving me, okay, Voltas call option, there's a long side building up here. Then if I say, if I go down and say Tata Consumer, I had no idea what really happened in the Tata Consumer yesterday, but here I can see that on the call side, 720 call option for the expiry of 20th January, OI buildup is nearly 3000%, and this is very huge. If you have seen, the OI has changed by 29%, and the green is indicating that OI has increase in the OI. The increase in the OI is by 2900%, and this is very huge to look into. Even though the price change is not that much, but you can see that market participants are actually taking position or in the 720 call option. And in the same way, if you see from the Tata Consumer downside, that 560 put option, and in the put option, there's a short buildup that is going on. So this is something which you can actually find in the FNO news, which is, so FNO news is helping you out to look into at the whole market, like the FNO segment, different stocks, and particularly the different strikes of that stocks. So if I say Tata Consumer 560 put option, there's a OI buildup of 350%. Okay, then but there's a price decline by 30%, and there's a short buildup which is going on in the put option, and at the same time you can see the call option is in the long side. So this giving a bit of a positive indication for the Tata consumer that market participants are building their long positions, and from the put side they are building the short positions. So this is where you can actually see if short is building up in the put side, then the put traders actually wanted, they're actually looking of that when put is getting short, they are actually looking the that stock to have the movement on the upside. And if you are looking at the call side, that call on the long side. So this is something you should consider the okay, something is happening in that particular strike. So now here you won't find all these strikes, but you will find the only where the unusual activity there is getting on. So if I look into the if I go and say, if I go more down, Adani Ports, 500 put option, 490 put option. So both the put option was in the short side. Means the put writers are looking forward to that the prices will be slightly on the high side. If you see the 500 put option, that 500 put option has a OI change of nearly 4,500. So basically, the way of looking into the motive of FNO news is to provide the information about the whole FNO segment, where the activity, that where the actual activity is going on, where you can see at which stock the movement has happened. So if you see here, so these are the data which is giving me ki, okay, in the last 5 minutes. So this is a 5 minute snapshot data. So it's telling me in the last 5 minutes in which stock and particularly at which strike. So if I say 500 put option, 490 put option, there's a OI increase of 45%. There's a OI increase in 490 put option by 2000%. So this is giving me a view, and it's telling me at this particular strike of this particular stock, there's something happened. So if I say on the put side, both are on the short. So it's that put. So this is the point where you can actually see, then you can see the buildup which is going on particularly on that particular strike. So short, when you see S, that means short. Short means what? That the prices are going down. You can see the price change is negative 35%, but the OI is increasing. And when you say long, long means when the prices are going up and OI is also increasing at the same time. So when OI and the price increases, long build up. Short means when the OI increases and the price goes down. And uh, then there's one thing. Then there's a, even you can see the long unwinding and short covering. So long unwinding when the price and OI both are declining. So let's see if there's any strike which is in the long unwinding. There's So long unwinding when both price and OI is declining, and then short covering. So short covering is a time when prices are actually going up, but OI is declining. So all the shorts are being getting covered up. So this is the way you can see, okay, that if prices are increasing, so whether it's a, you can see that whether it's a on a more of a covering side or a long build up side. So this gives me that for the price increase, the OI is also increasing, build up is long. Then you can see here SOP and IOP. So if you say SOP, the SOP stands for stock option and IOP stands for the index option. So now if I say that if I go to segment and if I want to look into only index options, that is IOP, if you can see. So if I go now, I can only see the index option like Nifty, Bank Nifty. I can see the strikes at where the OI change, IV change, and the price change has happened. If you see here, that give a better picture that how market participants are actually placing their bets, how they are looking into that, what whether they are shorting the put option, longs in the call option, that's a good sign. If they are shorting the call option and long on the put side, that's on the more on the nervousness side for the, that's a likely movement that can, it can be on the lower part of lower side. So you can actually see how the changes are happening in the altogether in the FNO segment. So this is about the FNO news, which is giving a significant idea about the whole market, where you can see the how the different stocks, how the different strikes of that particular option is moving, whether or the OI, how the OI is changing. So our OI gives a very good estimate, a good idea that how you can actually look into on a different market participant view. So this is about the FNO news, and hoping that you're much clear with it. So now we'll move to the next tool. So we're gonna see about the option triggers and see, we'll see, find out that where the likely breakdown or breakout can happen in particular stock. So if I say that I want to look that if I want to figure out, it's not actually, but if I say I want to figure out, and if I want to look which are the stock which can have a likely movement in them, like which are the stocks which could actually move or based on the option. So if I say that if a particular stock, let's say it's standing at rupees of 100, and at the same point on the call, that heaviest call is also on the 100. So I can say stock is at 100, heaviest call is that 100. And if something, like I can expect that some movement can come, and now I have to look into the market participant, because they are looking into the likely movement that could happen in that particular stock. So if I say stock is at 100 and underlying is heaviest call option is also at 100, and at the same time I see at the heaviest call there's a huge increase in the call writing, or there's a possibility there's a huge decline in the call writing. So in the call side, decline in the call side, or increase in the call side. So I'm looking into that what are the market participants are, particularly how they are betting here. So option trigger is that one tool which helps to find out that particular thing. So if I say that I want to see that uh, let me find out. So if I say let's find out the stocks which could have a likely movement. It's not sure, but could have. So here option triggers is very simple to look into. So you can see the future price here. So future price is actually for the stock. So if you say for a particular stock, so this indicate the future price. This is indicating the future price of that particular stock, which you can see here. And on the left side, you can see the highest call, and the right side you can see the highest put. So on the left side you can see the strikes. So now this is the strike where the highest call is, and this is the strike where the highest put is for that particular stock. Now there's altogether 140 FNO stocks. So finding them is bit on the tough side. So you can also sort it by here. You can sort it keyway is a place where the OI has changed, like highest OI change, or there's a highest OI at that, in which stock the highest OI is, or by the call difference or the put difference, or by the strikes. So you can sort the data as you want. So we'll gonna keep it in on a side off where you can also sort by symbols. So we're gonna find which are those stocks which are actually right now at their highest call option. So we're gonna see. So if I go to the highest call difference and say I want to figure out the stocks. So if I look here, Sale, Britannia, Scott's, Grasim, SBI Life, Hindustan Unilever, Motherson, SBI, Sun Pharma, M&M, Jubilant Food, LT. So these are the stocks which are nearby to their highest call. So if you say the negative here, if you see this particular negative, means that your that future price of this particular stock is trading above the highest call option. Okay, and if I say the normal, means that the highest call is at 75 and the sale is trading at 74.9, which is indicating that your symbol is trading below your highest call. Now we are more interested and more forward looking towards the change in the OI at that particular point. So if I say that let's take Britannia. So there's a difference of nearly 0.17% of the future price and the strike price. Means like it's almost 6 to 7 points difference between them. And in this particular strike, the OI is open interest is 1,81,000. Now you can see change in OI. So I'm looking from the call side. So change in the OI means at this particular strike, the change in OI, the call has increased by 40%, actually by 40.28. So this is giving me, okay, just keep a watch here that the riders don't want that two stock to go further from here. So you should be like, okay, I can see that there's a more increase in the call side. And so one more thing what I've tried here, that there's a lots of around 140 stocks. So we have given a good colors combination to which helps us to figure out the uh, difference among the numbers. So if I say, if you see any number in the green, so the green is generally indicating the range between -2, so -2 to +2. So that means if the difference of the highest call and the symbol and the highest put and the underlying stock is in the range of -2, that is in the red, in the green. And if you say that the difference is more than -2 till 5, -5, and on the positive hand, if you see from the +2, that more than 2 to 5, then you will see that number in the yellow. That now you can say that the 4.7 means the difference between the Reliance future price and the put option is around 4, like roughly 4.7%. So this is where you can see that there's a big difference between the future price and the highest put. At the same time, if you say that Reliance is trading at 1994 and the strike is at 2000, means that the call is nearly very close to it, and at the same time there's an increase in the OI, means okay, you should be considered here. And if you say something more than 5% on below -5%, that is in the white. That means the difference between the highest call and the future price, or highest put and the future price, is a on a big way. So you can look into. Now, if I go, so if I let's take the Scots. Now, if I say if I click on the Scott, so we have also added the tool interlink facility where you can actually jump from one tool to another. So option trigger, we saw that where you can find the different stocks which are very near to the highest call and the highest put. So we'll take one more example regarding the put option as well. So we'll sort the data first and we'll directly jump here. So if I'm going here and I say LT and M&M Finance, these are the two stocks. So if I say the data of M&M Finance, so M&M Finance is around 180.25 highest put strike as 180. I can see I'll just figuring out this stock. So it's very easy to figure out this stock which are at the highest call and the highest put. And what are the likely movement, how the market participants are actually looking here. It's very easy in the option trigger. So if I say M&M Finance 180 strike, put difference is nearly 25 paisa. And at the same time, I can say the OI of 2,24,000. And there's an increase in the put, increase in this particular 180 put option by 40%. And this is something very huge, and this should, you should be looking that the put writers are actually increasing their position at this level. So okay boss, okay, uh, please be on the part that even though this stock is at 180, trading at 180 near to the highest put option, but still there's a change in the OI by the 40%. So you can see, if I open the in the option chain, so now we'll see the broader picture of the option chain of this particular stock. uh, so now I can see here, now this is the option change where I can see the strike at how the OI is changing for the call and the put. If I go again to the option triggers, so we're gonna again go to, so I'm gonna see that if I say open interest and option gain, so we'll go to the open interest. So we are at the open interest. So highest, we are looking for the terms of the highest put, where the highest put is. And if I come here, if I say that that for the Cadilla the future price is 480, 481, highest put as also at 480, that means that your level of highest put is just below your future price. Okay, now I can see there's a huge increase in the put option as well as in the call option. So this is one of the new feature we have introduced, where you can see that at particular strike how the call and the put has changed or has changed. So I can see there's a huge way to the for the highest call option, and they can say that from the lower side there's a more of the incline like increase in the put option. So this is the place where you can actually analyze the different the stocks where the movement are happening. So if I take the in terms of the call difference, let's say uh, LT Jubilant Food, Sun Pharma. Sun Pharma is also very near to it. So if I say, if I go and check the Sun Pharma open interest, that now we are looking at the more broader picture, the more broader perspective of the whole market participant and the for the whole strikes. So we saw that the Sun Pharma is trading near to its highest strike of 600. Even you can see here at this level, the call is 19 lakh 60,000 shares, and the increase in the call option is nearly on that particular day, means yesterday, is around 3 lakh 30,400. So if you say here on the just the difference of 2.4, the call the highest call is, and this particular prime, the call writers are increasing their positions, and which is a sign of ki should boss let keep that the call writers are still here, they are still increasing the position in a very big way. And you can see the put in the side is only around 3 lakhs, so it's not a big amount as compared to the call writers at the same level. So you should be considered that the call writers are much more heavier, that call writers are very heavier on this particular strike. So you can see that how at which stock, so option trigger has helped me is actually helping me out to figure out the stocks which are standing at the highest call, at the highest put, and that particular level, how the OI is changing particularly, which is giving which is giving me a clear idea that if I say, like, as we saw the Sun Pharma, we saw that Sun Pharma was at so if I say Sun Pharma, so Sun Pharma was at trading at 608. Highest call is also at 600. So I can say that at this particular level, the OI increase was huge. We saw that OI increase of around 20% in that particular day, even though the confidence of the call writers, they are still on the heavy side, looking at, okay, that we are still increasing our position, call writers are still increase the position. So there's a likely that they are still looking that Sun Pharma will be having the slightly on the downside, will go on the downside and the downside. And from the put side, we saw there was no such significant increase in the put from the put writer side. So we can say that likely on the side key, okay, boss, just keep yourself till here. Sun Pharma just will can have a likely downshift, or likely can see that could add on the downside. So this is a place where you can actually analyze that which are those stocks which at the highest call and the highest put, they are having their momentum. So this was the about option triggers, where you can actually see the difference of the highest call, highest put, where actually can see how how you can identify the stock, and more precisely how you can see how the market participants are looking into it, whether they are increasing their positions, whether they are declining in their positions, where the point where the call writer, the put writers are very nervousness, or they are jittery, or they are, if they are nervous, or they are showing the jitterness, they will remove, they are like exit their positions. So there's a declining going on, or there's a more and more new market participants are coming up and taking position at the highest call and the highest put, which shows more confidence that even at the level of, we saw for the Sun Pharma, at the same level, the highest call is 600, and the trading at 600, market participants are like still increasing their position on the call side. So this is the place where you can actually analyze all these things. Now we'll move to the last uh, topic for the day, that is seasonality. And we have started the new year, we have started the new beginning, the new life, and we should be looking into how the trends that happened in the previous years in I would say in a particular stock index or sector, how the IV was on a different period of time. So what actually seasonality means? So if you ask me, and if I say that seasonality gives you that the seasonal behavior change of a particular index or stock, that how a particular underlying behaves on that particular season. So seasonality gives me that seasonal behavior of a particular index or stock. If I come here and say, if I come and say that I want to see that how Nifty, let's take Nifty, has behaved over season to season in the past. So we are actually analyzing it here. So if I come here and I say, so 2020 always remain to be outliner for the it's going to be a outliner, because a lots of things happened. We saw the decline, then we saw the rising. So we can, I usually keep 2020 as outliner. So that depend on the person to person. So if I say that I'm looking into that how a particular, so if I'm take Nifty 2021, so this is the year of reference, and if I let's increase our, let's keep it to 7. So we have the more years. So we are analyzing in terms of for the last 7 years how the seasonal behaviors actually come in a particular stock. So if you see, if you look for the how, if I go here, so if you can see at this point, now you can say the terms of July all for the last 7 years, Nifty has for the July for the month of July, the returns was fairly on the positive side, positive side, positive side, even for the 2020 outliner year. 2019 was an exception, but apart from that, 2018, 17, 16, 15, all were in the positive side. Okay. Now I'm looking what happens after July. So if you can see that after, so July, if it goes to August, now the deviation which comes from July to August is on the big side. You can see the deviation which are coming, that 19, 17, 15. You can see the pattern which are building up, that there's a that returns, Nifty returns from July to August get deviated. Then if I say then September, so this is the September seasonality of the last 7 years for the Nifty, that apart from 1 year, for the last 7 year almost, 2019, 18, 16, 17, 16, 15, that's 6 year completely, the returns were on the negative side. So which is giving me an indicating, okay, for the last 7 years, the 6 year, sorry, more precise 6 year, the seasonality behavior of the Nifty were on the negative side. So I can actually analyzing it on the monthly to monthly basis for last 7 year, that after August, that the after like from the July I can see the positive returns, from August the returns get deviated. Then if I come to September, that's all come on the page of negative note. So all are in the negative note. Now if I say October, then against the sum of the deviation which is coming on. So how a particular season, so there is a seasonality behavior, seasonality effect, and we all know many of these stocks like cement, paints, auto, they have the seasonal effects. So if I say that if I, in terms of Diwali, when lots of festival season, jewelries like jewelry stocks, then your auto stocks, most of because of the auto finance stocks, they have the good returns because the sales were in the good note. And in the terms of, if I say that when there's no festival season, there's no such events like in the terms of Indian market, there's no auto sales, there's no financing. So I can say there's a season where the that particular sector remains on the dull side, on the positive side. So if we are looking at the Nifty, I can say that how the seasonality behavior is occurring on that particular stock. So this is a tool which gives a broader picture of looking into it. Now if I jump to the sector wise, we'll see the different lot of different sectors. So particularly we'll see about, let's take the auto and see how the auto. So if I go to the auto sector, so there's this, if you see this particular uh, dark orange line, that's a outliner, that's a 2020 which is indicating. So if I keep this aside and if I look for the last 7 years, that how a particular sector has behaved. So if I say on the January, Feb, so if I say in the month of Feb, so after on the Feb, you can see from almost for the last 7 years, the returns were on the negative note only. So for the auto sector, I can say that for the February, there was no such good returns, that the auto sector and the combined, I'm saying the whole auto sector, the whole F&O. So particularly all the F&O stocks which are in the auto sectors, I'm looking into that. Then if I go to March, again the deviation, like bit of the deviation, but it's still on the positive side. Keeping 2020 aside, if I can say, I can analyze on the positive side. Now, if I feel after March, you can see the most of them has been on a good note for the last 7 years. Month of April was a good. April has shown a good of returns from the whole like cumulative auto stocks. Then so for then June, at the time of June, you can see the negative return goes on for the last 6-7 years for the auto sector. Then July, September. So this is a September, October. This is a place where the festival season comes in. So if I say September, October, November, October, you can see just from being taking the 2018 just one, everything goes on the very positive side. September, you can see everything's on the positive side except for the 2018. So you can actually analyze that at how the seasonality behavior is affecting a particular stock or the whole sector. If I take let's take one any other uh, let's take the cement, let's take the cement. So you can see the lots of deviation that comes in the cement sector. But if you see, if you have noticed on the month of January, if we start the January month, so if we can see the lots of deviation either on the positive or the negative side that comes from its starting point. So which is indicating on the month of January that depends on how the situation is. If I say that deviation here is like slightly going down on the this, and so all are getting in the same page for the month of for the Feb. Then again, so you can actually see that March, then April, May, June, July. How how the all the FNO, all the cement, which cement stocks which are in the FNO segment. So if I take the cumulative, the performance of that particular cement sector, so I say month of July. Month of July is also being on the positive note for the last 7 years. So this telling me seasonality behavior for this. If I say June on the more on the negative side, where the cumulative, the whole segment did not had a good returns. Then if I say June, July, then again September down. October, you can see there's a whole where like almost every year there was a good positive side for the October segment, for the October, except for the 2018. So it's giving me a rough idea how the seasonality is kicking on any particular stock or sector. And this is something which comes very important while making your strategy, while knowing that how a season is going to behave, or like how it's going to impact your that particular stock. So if I go to again to the prices, if I say that let's take a stock, let's take Bajaj Auto. So we'll see how the seasonality effect of the on the auto side. If I go to August, September, October, November, so I can see after July, then on August, this always remains on the positive side. There's one 2020 as an outline. If I take out, then September, yeah, then August, there's a good side that positiveness comes in. Then September, again the deviation. October, the deviation. But if you have noticed one thing in the month of October, like that's a like festival month, some sort of like starting of the festival, you can see the downside is, except for 2018, was not that that's on a big dip side. But if you see the positiveness that comes here for the 2019, 10%, 5%, 2017, 15, almost 10.5%. So you can see that seasonality effect actually has an effect on the on this particular stock. So this is, then if you say February, so keeping apart 2019, every last 6 year has on the downside. So I can say on the month of February that this particular stock does not have given a lot of good returns. So this is about the seasonality, where we are looking into that how a particular stock we saw, or any of these stocks which you can say. Let's take one more. If I say 1 second, let me see. So we saw the paint, say, so most of the IT sectors, IT stock goes on. No, Jubilant. if I say Bajaj, let's take Bajaj Finance for the 5 year. If I go more to the 7 year period, I can say how the NBFC we are looking now, that you can say for the month of March, April, May, June, for the last we are looking for this particular stock, that NBFC stock, that how the NBFC stock has an effect like seasonal behavior. You can see the month of September has some deviation. Apart from that, for the last 7 years, you can see in the month of January, particularly month of January, you can see there is some deviation which comes into, which kicks the like deviation comes into. Then in the February, it's all good. 2020 for the it's a exception. Then April, May, June, July. Then again come to September. Now this is a place where some deviation kicks into. Then again October deviation comes, November and December. So I can say September, October, some deviation comes. In the month of January, that deviation comes. Apart from, you can see the seasonality behavior of this particular stock. Same wise sector. Now the point here, we're gonna see that how you can see more of the into it, more of the seasonality behavior. So if I jump to the table view here, I can see the average monthly return. Ki okay, that for the last if I'm taking 6 year, for the last 5 to 6 year, for the last 6 year, that monthly average return of Nifty, if I've taken Nifty, is remains on 1.2% for the January. You can see the monthly return of all the months, that for the last 5 year, or like if I say for the March, for the last 5 to 6 year, how the returns were, and the monthly, or how the average monthly return. You can see the average return of all like at the end of year, to see know the what are the yearly returns, or the yearly return of that particular stock or symbol. Same wise in the sector, you can see the table view, that how the returns were for the particular sector on the different months, average monthly return or yearly return of that particular sector. So pharma sector, we have looking at the pharma sector. If you have noticed here, pharma was the I would say a big on the show, like it's a top show stock in the stocks in the this particular year, because the event that happened in the 2020, it was on a very big note. So actually you can see how the outliner, like we saw 2020 as outliner. So we can see how the seasonality behavior in the stock, we can see, we can identify the outliner. We can see how that particular season has the effect on particular stock or sector. So this was about the seasonality behavior. So we'll take the Q&A session, and before that we'll go to the concept side, and we'll talk about we'll see the what a learning event which we are bringing up, that is Symposium 3.0. So Symposium is India's largest conference, and it's going to be held on 23rd and 24th of January. So the big thing about the Symposium is a place where you can actually learn from the market expertise, like who are looking more into uh, options, that how we are how you can actually learn how different market expertise has faced and tackled the different scenarios, what are the strategies they are using it, how they play with the volatility, how they control the losses due to volatility or the uncertain price movement. They will tell you, or they'll tell and discuss about the different scenarios, and they will discuss about the different approaches to be taken at the different situation, at the high volatile situation. They're gonna share their experience. So we are bringing the Quantsapp has tried bringing up the international speakers. You can see Tony Batista, co-host, history trader, lots of known persons in the international option market. Then we have also brought up the domestic uh, good names as well, like Saurabh Sisodia, co-founder Quantify Capital, Rishi Kohli, then Mr. Anupam K. Mitra, Mr. Uday Dev. He's a full-time intraday trader. So he gonna like this person gonna tell about you what to do in different scenarios, how they will discuss about what they have done in the different scenarios, looking at the volatility, looking at the is then we'll see they're gonna discuss the different ways of what to do and how you can actually control your emotions, what are the strategies to do. Yogesh Nanda, he's an option trader and trainer. Then Mr. Shubham Agrawal, he's a CEO of Quantsapp. Dan Gaby, co-founder, MD, Master Traders. So these are the person who have more expertise in the options and the derivative. You can actually learn a good things about the options, about the volatility, about the different scenario, how to tackle scenario. More you can see talking about the retailer side, you can do so. And you can join us, you can join the this event through the joining the Quantsapp family. You can go to join 9 and you can subscribe to the application or the advisory service. You can subscribe to the application uh, uh, for the you can get a 1 year membership for the application and the option symposium at 17,250, and you can be part of the this mega learning event where you are actually learning a good of that how to so how you can actually learn more about the option and you can come out as a more good person as an option in terms of the option. So this is going to be on the 23rd and 24th of January. So this it's a virtual event. You can join through your online, through your mobile phone or the laptop, and have an opportunity to learn, because learning never stops. Learn and learn about the option. Market is dynamic. We saw in the last year 2020, market is dynamic, can take any turn from anywhere. How to like stop ourselves from not getting in having getting troubled into a wrong situation. So you can actually see all these things. Now we'll move towards the question answer. So I have some questions. So the first question we are taking: any place to see Greeks for my position? So, Mr. We have seen architect. So if you have position as in terms of strategy, so I would say ki go and take, like I'm taking for example, if I say go and take the Nifty, so you can see the Greeks for it here. You have the all the Greeks. So the more you are adding your positions and legs, you can see the Greeks for it for all the legs, and the combined strategy Greeks. That's more into good side. And you also have the option to use this strategy chart. So this is a place. So I can also show you. And this is the we have bought into again. That's a new charts we have bought here. So if I say so, I have a strategy. So it's a Nifty calendar call for the 14th of Jan. So if I say, so I can just open this chart here. So it's showing me the prices of the calendar call. So even here you can, in this particular charts, you can create any of your custom strategy. And the point is here, you can make any custom strategy. Moreover, you can see the prices of it. And the thing I'm going to tell you is adding your Greeks into it. So Q, if you type Q here in the indicator, if you go to, so let me do it again. So on the chart, you made any, suppose you made any custom strategy, you go to indicators. You want to see the Greeks of it. So you first, you have all the indicators on the side. Then if you type Q, then you can see the Q stands for the Quantsapp. So we have bought up, like not bought up, but we have tried inputting the delta, gamma, theta, vega for any of your custom strategy on the chart. So if I say delta, so if I want to see the calendar call, if I am making this strategy, And if I want to see the delta of this strike or delta of this strategy, so I can actually see what is the delta of this particular strategy. So if you are having any position, you can actually see there are 2 point delta and delta on price. Delta on price means now the delta will plot on the price along with the price, and if you only select delta, that will going to plot on you on the new panel. So this is where you can actually see where is the delta, where is the then you can see about all the option Greeks, that delta, gamma, I can add theta, vega. So you can actually add all of them on the one go for any of your custom strategy, taking everything. So these are the two places where you can see the Greeks, and there's lots of other things you can see on the option chain, where you can see chain. You can see if you are holding one or two legs, you can see the Greeks here as well. Um, then there was a question: what indicate in call or put different color fonts? Okay, so we have already spoken about that, but again I will get into it. So in the triggers, the color difference for the call difference and the put difference indicate. So we have all three together in the one go. So if I say the green, so green indicates that if the difference of your, say, suppose your future, let's say your for example I'm taking, if your future price of your underlying stock is at 100, and future is trading at either at 99 or at 101, so the difference will be on the side of green. Means अगर 100 रुपए का आपका फ्यूचर प्राइस है और आपका हाईएस्ट कॉल और हाईएस्ट पुट 2% के अंदर है, मे बी इन द 98 to 102, then that difference particularly going to be on the side of I would say on the green side, and the difference is more than 2. So अगर 100 का फ्यूचर प्राइस है and the difference is above 103, like 103 to 105, so more than 2 to 5, and so 102 more than 102 to 105, and from the down, if I say the difference is less than 98 to 95, then it's in the yellow. So you can see the difference of like 3.94 means the difference of from more than 2% till 5% from the downside and the upside. And if you say white, so white indicate the difference more than 5%, either for the negative and the downside. So if I say the future price of an underlying is 100, and the highest call is at more than, highest call is like suppose 106, or the highest put is at 96. So there's a difference between the highest call and the highest put is more than 5%. That has been indicated in the white. So basically, it helps you to gain a knowledge ki, okay, which are these stocks which are very near to its highest call or the highest put. I hope I am clear. And if you still have doubt, you can ask. So there's one question regarding the IV. I'd like to take it. So the question was, do you have any IV rank model to know which option future has the highest IV in all stock? Okay. So IV altogether for the options, knowing which option future has the highest IV. So if I talk about the so this one which is volatility greed, where you can actually see the volatility of all the FNO stocks. So if you want to see the volatility, HV volatility, IVR and IVP, where you can, this is a place where you can actually see for volatility for all. So here you can actually find the stock, sort the stock by IV. So if I'm sorting stock by IV means it's giving me the first name as the which has the highest IV. So Idea at present the highest IV, followed by iBull, Bale, GMR Infra, Sale, Zeal. So you can see the IV of all the stocks. if you go down, then you can see the IV. So this is the IV based on like on the whole FNO stock, that which stock is having the highest IV and which stock having the lowest IV. Further, you can sort by HV key, which stock which is having the highest HV, and then one is IV minus HV. So this is more interesting part, which tells you ki which stock is having the highest difference of IV and HV. So where you can see ki difference of, if I say PNB IV is 59 and HV is 82. So that's an altogether different scenario. So this is a volatility grid where you can see the IVs of all stocks. So taking the next question. So there's a question on the build up. So if I say, if I go to particularly on the built up side, and it's a built up. So we're gonna see the type of build-ups that happens. So if I say that, someone has asked that how we can see the built up for stocks. So when you say that built up, like say if I say long built up, that means the price change and the OI change both are in positive side. So the price is also increasing, or OI is also increasing, the built up is going to be long. Now, if I say I want to see the short built ups, the short built ups are those where the prices decline and the OI increase. That is known as the short built up, that prices are declining and the OI is declining. So the market participants are taking positions, so they are participant even in the price decline. So prices are declining, they are adding their more position in it. And if I want to look for long unwinding, so long unwinding is when the prices are declining and the OI is also declining. So short covering is when the prices is increasing, and that like the short which is already being made up is now in the cover side, that it's market participants are covering their short positions. So this is the how you can see about the build up of different stocks. So there's one question regarding the fair price. How is the fair price calculated? So fair price is it's just nothing. It's just about the taking a at the money strike, adding up the call premium, and mine minimizing the put option premium for your at the money strike. One that's next question, for my strategy, where and how can I see my probability of success? Mm, so at present we don't have the probability of success, but we can you can actually analyze that at what level you can actually make your strategy in the profit. We saw that in the option architect. So that's all from today's session. I hope you have liked it about the tools we have taken, and join join the Quantsapp on the social media as well. We YouTube, Quora, where we answer questions and answer. You can actually learn a lot in the Quora. Then we are into the on the other social media platform. And if you have liked that today's session, please like us and review, put your review on it. Thank you and have a nice day. Have a nice starting of your year. Be more, keep your part on the more on the learning side. And that's all.